Sure. Thank you very much for that introduction, and good evening, everyone. Can you hear and possibly see me?
Yes, Jeremy, we can hear you.
Awesome. Thank you. All right. 1 second. I just want to share my screen.
We hear you and see you clearly.
Great, great. Thanks for the confirmation. Okay. So good evening once again. It's a pleasure to be with you tonight. As always, it's going to be one of our interactive sessions and it's going to be a presentation. It's always good to be in the presence of fellow DFS practitioners who are on the same journey of learning and exploring this new world of digital transformation in financial services. Now, the topic we'll be chatting about tonight is on the subject of digital twins, or more specifically, how digital twins apply to the world of fintech and banking and financial services. I just remembered that Barbara asked me to slow down today, so I'm going to do my best to speak as slowly as I can. So let me just begin with the caveat or the disclaimer that nobody is really an expert on topics that are emerging such as these, and I'm merely going to attempt to share as much information as I have gathered with the wider group. And I invite everyone and anyone, because I see so many fellow practitioners who have a lot more experience online, and I invite anyone and everyone to contribute, to question, to explain, add or subtract where you feel moved to do so that we can all benefit from the collective knowledge rather than just one person lecturing. So if we're all okay with that, then I'll jump straight into the presentation so we don't lose out on the time. Okay. Great. So the format of the presentation that I intend to follow today will first off start by defining what exactly digital twins are. We're going to go back to its origins, talk about how it came to be. Then we'll move on to the application and benefits of the technology. For better understanding, we'll also discuss some of the use cases of digital twins and how some banks and fintechs are actually using the technology even today. Then we'll move on to some of the challenges and limitations that exist within the technology, as with every other technology. Then we'll chat about some of the best practices to implement digital twins to make sure you get the kind of outcomes that we're looking for. Then, as always, we'll project forward and look at some of the future trends, and that's probably where we'll conclude if we don't have a discussion ongoing by then. And hopefully we are able to stay within the allocated time box that we've been given. So hope you are all good with that. You can show a thumbs up if you're good, because that's all I can see when I'm sharing the screen. Barbara, is this space okay?
Yes, please. It's fine, Jeremy.
Great. Just needed your confirmation. Okay, so then let's jump straight into it. Okay, so to begin with, digital twins are virtual replicas of physical objects, processes, or systems, and they are used to simulate and monitor or to optimize performance in real time. So to put it simply, a digital twin is a digital version of a real object that is created using data from various sources. So data from sensors, from machines, from algorithms, from software systems. You use all of that data to create a digital version or digital replication of an actual process, item, system. Now, the digital twin uses advanced analytics to create an accurate digital representation of the physical system, and it can also be used to monitor the performance of that system. So the main difference that exists between the traditional analytics that we do, let's say in finance, and what a digital twin would be doing in finance is that traditional analytics in fintech would involve you analyzing data to get insights into past events that has already happened and try and use that to project outwards or into the future. But it's essentially past data on past events, whereas a digital twin or model involves creating a virtual model of either, let's call it a financial asset, a product or service, and you use that to analyze the real world scenarios to enable real-time decisions that you are attempting to make. And I'm sure it will become clearer as we go along. It's not the easiest concept to understand just from a definition, but the more we provide color and context to it with the examples, how others are using it, I think it will become clearer. So just for sake of definition, it is essentially a digital replica of a real world item, physical object, system, or process that is rooted in some underlying data source. And we'll just attempt to add more color to that definition as we go along. So going back to the history of digital twins. So the concept is not new. It's not new at all. It has actually been around, or it was first mentioned in 1992. If you look at the image on the side, it's a cover note of a book by David Galenta, which was called Mirror Worlds. And in that book, he mentions digital twins for the very first time. It's quite an old book, but it's one of those books where he was projecting. If you look at the tagline, the title is Mirror Worlds, or the day that software puts the universe in a shoebox, and how it will happen and what it will mean. If you read the book, he goes on extensively to talk about how, with the rise of software, the rise of machine learning, artificial intelligence, we're going to see more and more revolutions happen, in the sense that you're going to see artificial intelligence begin to become more intelligent, and human beings become more interested in the outcomes. And ultimately, where he leads to is essentially saying that artificial intelligence is going to become more human-like, and human beings are going to become more like machines, because we are going to want to be able to do the kind of things that artificial intelligence is able to do. So it's an abstract book. It's far out for those who are interested in books like that talk about what the future of the world could be. But that was where the concept of a digital twin was first mentioned. There's actually a shorter version on YouTube. It's a very bizarre video, but I'll put it in the link for anybody who wants to watch. But it talks about when the thing that most people fear, when how artificial intelligence will take over the world, and what essentially will happen to the human race once we become integrated with AI in our daily activities. But that was where it came from to begin with in that book. But it actually became popular when NASA took it up. So NASA gave the concept its name, and the digital twin technology was used by NASA to create digital simulations of their spacecrafts, of their turbine engines, of their capsules for testing. Because one, the parts of spacecrafts were just too expensive to just test them out, have them get destroyed or blown up. So it was easier to use digital twins to simulate the virtual versions of the real objects in order for it to become easier to test and simulate how it would perform in real life. And that's where it started from, and now it has evolved to the point where we have digital twins being used in so many other industries. So before we bring it back to fintech, let's look at how it's actually being used in other industries. So these are the most popular areas where you find digital twins. So manufacturing, aerospace, healthcare, energy, construction. In manufacturing, it's used for optimizing manufacturing processes to try to use it to reduce downtime, improve product quality. Then in aerospace engineering, I've already spoken about how NASA started using that. Then when it comes to retail, so digital twins are used to simulate a customer's behavior or preferences. And we'll get to an example of how even the company I work for, Jimo, does that. But it basically tries to allow retailers to optimize their product offerings and market strategies, because they now have a deeper understanding of the customer, because they have modeled that customer virtually and are able to an extent, predict that customer's behavior in order to assign them the best products and the best marketing offering. So it's not so abstract, because in certain ways we already use that. And construction is one of the easiest ways. They sort of project out what a building is going to look like before they build the building. And in order to do, and they do that to be able to manage the projects more effectively. So reducing congestion, improving safety, and the like. In healthcare, and I'll show you a video where they use digital twins via some of these devices like HoloLens and HoloLens to be able to determine what it's going to look like ahead of a surgery, or they use that to train new doctors or remote doctors so that they're able to actually simulate a surgery before the actual surgery. And because of the technology like augmented reality, virtual reality, it's easier to do, although the technology is expensive at this point. And for transportation, it basically falls in line. So it's used to optimize the transportation systems, reducing congestion, improving safety. China does this quite efficiently. So maybe a visual of this would be easier for you to see. Okay, so this is a very short video that shows the capabilities of Microsoft HoloLens. I think I showed this to you in the previous webinar that we did. But essentially, we are going to evolve to the point where using these glasses or these headsets, we are able to actually navigate or manipulate these virtual replicas or virtual twin objects. So this is what I was speaking about when I said they are used for training, to train nurses and doctors to simulate what an operation would look like before you actually go into the operation. So the person has a feel of what to expect, or so that they can just analyze the situations that they might be in. In sort of the entertainment and theatrical space as well, people use these to simulate the kind of environments. Now we have a lot of artificial intelligence art, artificial intelligence movies. And when it comes to things like how we do our remote working, how we work with people from all over the world, how engineers put together all the models that they are going to build, you use these HoloLens, or it could even be in a two-dimensional field, like just on your PC or on your phone. This is just to show you what the far out endpoints would be. But you're actually able to project or predict how things are going to act because you have so much data on existing patterns, and you're able to use that to determine how things are going to pan out in the real world. So let me just stop disturbing you so you can just see a few of these things. Okay. So overall, in many different industries, digital twins are already being used. They have the potential to provide significant benefits to a wide range of industries. They provide you with more detail, more real-time digital replicas of physical systems. And if you are able to actually tap into it and relate it to the need that you have, you can either use it to optimize your operations, reduce your cost, improve your safety and reliability. And for most of us who deal with customers, the ultimate thing is being able to enhance your customer experience. And as we go along, we'll talk about these things. So these are some of the use cases that we have for digital twins in banking. So the first one, like we said, is customer experience. And when it comes to customer experience, digital twins are used to provide more personalized and more seamless customer experiences because you are able to simulate and analyze the customer behavior. So for example, if any of the banks actually had a mobile app that collected all the data on a bank, and when I mean all the data, sometimes you speak to a financial institution and they have a core banking system. And when you request for data, they provide you the data that is captured on the customer. So just transactions and KYC. But for example, every action that a customer takes should be able to be recorded if you had some sort of platform that could attract all of this data. So the SMSs that go out to the customers, is data provided on that? Because we have so many different systems and platforms, SMS is provided by a different provider, core banking, different provider, backend, different provider, reports, different provider, data warehouse, different provider. It's really difficult to find that single source of truth. But assuming you had all of this, it would make it easier for you to replicate that customer and their behavior in order for you to enhance that experience, because obviously you can group customers by their like. So assuming Jeremy and William have the same tendencies when they go into branches, you know that if this product was given to Jeremy and he appreciated it, then perhaps you should also show that to William in that sense. So it starts with customer experience. When it comes to fraud detection, digital twins are used to identify some of the fraudulent activities that happen by just simulating and analyzing the customer's behavior. In our company today, we have been able to notice patterns, and maybe just for context. So we work with mobile loans and we partner with the banks and MTN to deliver mobile loans. And one of the things that you notice that people tend to do when they are offered a mobile loan is they try to game the system. So they try to just send loans or send money into their wallets back and forth, trying to game the system. Now, what you are able to do is you build algorithms that are able to understand or mimic this kind of behavior so that you're able to build a fraud pattern. Now, once you have the fraud pattern, anytime somebody else tries to do that, it automatically triggers that the person's behavior mimics this fraudulent persona that you built or that fraudulent digital twin. And you are able to either cut the person really at the beginning or mitigate that behavior quite early on. When it comes to product development, that's a no-brainer. It's in line with what we've said. Once you know the customer, you know their habits, you know their needs, you know their age range, where they are in their career, where they are in their life, it's easier for you to be able to identify the kind of products that they would need. And you're able to segment your customers better because now you've built, let's say, digital twins of each particular persona of each segment, and it makes it easier for you to Sorry, I just remembered Barbara said slow down. So it makes it easier for you to create a digital twin and then build products that are best suited for those digital twins. When it comes to loan underwriting, that's exactly what I've said that we do. It helps you to simulate and analyze the customer's behavior, their creditworthiness, improve the accuracy of the loan underwriting decision. So for example, if a digital twin of a customer's financial history and behavior is obtained, or is created, you use that to be able to predict not only their current creditworthiness, but their future creditworthiness. And you're also able to improve the accuracy of your loan underwriting decisions. When it comes to trading as well, we've already seen that happen. A number of, let's call them crypto trading platforms have started falling back on robo-advisors as their main way to trade. And they use those robo-advisors to optimize the trading strategies and the performance. And they do that by simulating and analyzing those market conditions, those trading behaviors that will enable them to get the best outcomes. So a digital twin of a trading algorithm would be used to simulate and optimize the performance under different market conditions. And that allows them to improve its trading performance and its profitability. Now, there's a number of benefits to having digital twins, and it's in line with some of these use cases. So the first reason why a lot of people in financial services use these are because, one, it improves operational efficiency. So it allows you to optimize and streamline banking and fintech operations because now you can simulate various solutions. So you leverage the digital twin to be able to identify all the inefficiencies in your operations. So this is something that I've seen a bank attempt to do. They try to replicate all the transactions that happen within the branch onto their virtual platform. So they know that once you go to the branch, you can do all of these things. Then based on this, they were able to identify which processes take a longer time for a customer to get through and which processes take a shorter time. And they try and mimic the processes that take shorter times because customers' happiness or satisfaction or delight comes when they spend less time doing operational things within the branch. So assuming, let's say, you could replicate your entire branch activities onto your mobile app, then you have a digital twin of your branch on your app. And based on that, you are able to determine what is relevant, what is not relevant. It's also good for risk management. So digital twins are used to model, to simulate various risk scenarios, and it allows a lot of the banks and the fintechs that are using it to optimize their risk management strategy. So they identify, they mitigate some of the risks that they see because they're able to, and then based on that, they're able to reduce the likelihood of the losses and improve the safety and stability of their operations. We've talked about the customer experience. So basically you try and improve a customer satisfaction and also build their loyalty because now you've modeled that customer. You have a digital twin of the segment that they fall in. And based on that, you are able to perform better product penetration activities, marketing activities, which ultimately leads to more efficiency, increased revenue, more profitability, all the things that the banks are looking for. Then when it comes to the product development, there's also like faster time to market because they are used to accelerate the development and deployment of new financial products and services because now you have a digital replica of your customer base that is adequately segmented. You're able to bypass all these alpha, beta testing that is required or actually in-person testing where you have to go to the market, trial and error, and it can take several times. Now you can iterate based on the data that you had and go to and basically get your product out there quicker. And then finally, it basically gives you better data-driven decision-making. So digital twins are used to, they are essentially used to analyze vast amounts of data and provide insights that allow you to inform or form data-driven decision-making. So you leverage those digital twins to gain deeper understanding of your customers' behavior, the market trends, and allows you to make more efficient decisions in marketing. So here are some of the banks that are actually using it so that it doesn't seem like it's so abstract. It's far out. So you have institutions like banks. So you have MasterCard that has actually developed a digital twin of its payments networks that allows the company to simulate and analyze some of the scenarios that it is optimizing for when it comes to its payment processing capabilities. So they use their digital twin to identify the potential issues and bottlenecks in their payments network. And that allows MasterCard to take the proactive measures to prevent disruptions. I think when they first started doing this, they basically just called it advanced data analytics, but then eventually they came out to say they are able to simulate all the real-time transactions that are happening in a virtual world that gives it these advantages. You see JP Morgan Chase, what they have done is that they've created or they developed a digital twin of their treasury business, and that allows the bank to simulate and optimize its treasury operations. They use that digital twin to model various scenarios, such as like changes in the interest rates or currency fluctuations, and then they optimize the bank's funding and liquidity management strategies in line with the simulations that they're able to do, right? You take Goldman Sachs, for example, one of the big names. They always follow suit when these kind of trends in banking happen. So what they have done is that they have created a digital twin of their securities trading business. So it allows, they use that to model various trading scenarios. So changes in customer behavior, optimize the company's trading performance, and to optimize the company's trading performance and profitability. The company that I work for, Jumo. So we are basically trying to provide credit services to people who have no financial transaction history other than what is on their wallet. So initially, you build the traditional algorithms, you build the traditional machine learning model that uses the existing data on the wallet. But as the customer begins to transact more and more on your platform, you begin to go away from the historical data because that no longer becomes an accurate predictor of how they are going to behave today. That information shows you how they behaved in the past. So as, let's say, Equia begins to use the platform more and more, you are able to create a virtual replica of Equia and other customers who behave like Equia. It's similar to how if you pulled out your phone today, went to Facebook, Instagram, or even Google, the more topics you enter, the more you begin to see those showing in your feed. And that's based on the algorithm. But it's also based on the fact that they map your behavior to other people who have similar interests. And if they see that Wilfred and Jeremy tend to look up fintech products, but then Wilfred also tends to like technology that is not specifically fintech, I'll automatically see that I'm getting recommendations for some of the interests that he has, because it's likely I'll have that as well. And that's what typically happens. So you build a twin of the person who is using your platform based on all the data available for you. And based on that, you're able to predict what another customer with similar traits or behaviors would also do. And it's exactly the same thing. So FinChatbot is a South African fintech startup that actually uses digital twins to automate customer service interaction. So it follows that whole interactive AI model. So you've seen what ChatGPT is doing. What ChatGPT is trying to do, or is aiming to do, is to try and bring more of a human feel to a chatbot experience, and have integrated into the World Wide Web so that they are able to provide you as much information in an objective manner as much as possible. And this fintech is already trying to do the same. So they take a lot of data from their interactions that people have with their chatbots and use that to shape the bot's interactions back with the person. So as soon as they start speaking to you and they realize that you are the type who speaks, let's say, with a sense of humor, the bot is able to adjust its personality to match your sense of humor. Or if you are somebody who is basically a straight shooter, it provides you the same kind of answers. And those are some of the examples that it's being used right now. Okay, don't know how we're doing on time, but I think we're good. Just checking 1 second. Okay, so obviously when it comes to new technology, there's always going to be challenges and limitations. So it's not always rosy. It's not all rosy, especially when we are early days like this. And so some of the challenges that you face when you try to implement a digital twin is the fact that it requires data from various sources. As we've said, if you take a typical bank or they'll just use a bank, right? The bank has its core banking. It has a data warehouse, but it usually has a separate function that generates reports. It has a separate function that sends out notifications, separate platform that houses its ATMs. So even if a bank is giving you the data that it has, it's giving you, let's say, 3 out of the 7 siloed data that it has. In order for you to actively be able to model a customer, you need to have all data, the wholesome data on it, and it can be quite complex to do. So because the data itself is complex and it's diverse, it's coming from different systems, different platforms. And if you are supposed to be able to build a digital twin based on that data, that means you have to integrate with all of these systems. And that can be very difficult to do, specifically because most of the time the data is in various formats or different various structures. So that is one challenge. Obviously, it's not cheap to do. If you're a fintech startup or a smaller bank, you might find it hard to justify the cost of implementing a digital twin, especially if you have limited resources. When it comes to the scalability as well, it can be quite complex because it requires significant computing power to run. So scaling up a digital twin would be a challenge for, let's say, a regular institution because of the computing. If you've seen what ChatGPT has said, if you're in Ghana and try and access ChatGPT now, it tells you that they are at capacity because of the number of people who are trying to use it. That's because it requires significant server power, backend power to be able to run all of this. And if you're trying to do the same in-house, it would be difficult as well. When it comes to privacy and security, obviously we have to deal with this because the banks or a fintech deals with sensitive financial data, which can be the banks are always tied up by regulatory requirements and security concerns. So you want to implement a digital replica of your customers, but you also have to be sure that you are staying within the data privacy and security measures that are in place to protect you against, cyber threats, data breaches. And so that could be a challenge as well. There's also the resistance to change because most people, you have to justify this to the people that you're going to be resourcing on the project, and it's very difficult to get people. I think resistance to change is very familiar, or most people in the DFI community are familiar with that. And then the lack of skills. Obviously, this particular field of AI and data analysis, data scientists, being able to model it requires specialized skills, and then there are not that many people who have them. And those who have the people who have the skills are really holding on to them. So finding the talent with the necessary skills and expertise can be challenging, especially in regions where those skills are in high demand. So it becomes quite difficult. And I think it goes the same for the complexity that is involved. So when you try to implement a digital twin, for example, as we've mentioned, just based on the kind of skill sets you need. So data scientists and analytics modeling, just finding those people will be difficult. The data quality we've spoken about, the data privacy security we're talking about, the computational requirements. The result of all of this is the limited predictive power. So the whole point is that you're trying to use the digital twin to give you real-time info about what's happening on the ground with whatever process, system, or object that you're simulating. But if the data that you're providing to a digital twin or to the technology is not sufficient for you to build an accurate replica of the data of the physical object, process, system, whatever it is, it becomes difficult, and your predictive power, the accuracy of your data becomes quite limited. And also because the algorithms are self-learning or are supposed to learn by themselves, it becomes difficult for you to simulate some of the actual real world scenarios or interactions when it comes to NLPs, because they don't actually capture the nuances and complexities of human behavior, which can limit their predictive power. And let me give you an example. So in our area where you work with trying to leverage data from, let's say, MTN mobile money to predict a person's behavior. Okay, let me use the banks because that's easy. So people don't realize that sometimes when, let's say, a lady goes on maternity leave, they go for long periods where there's not a lot of activity that you can see on their transaction platforms, or their behavior changes during that period. Now, if you just allow your algorithm or your digital twin to just treat that behavior the way it would treat every other behavior that has been modeled into it, it will not recognize that this is not somebody who has either gone dormant or become delinquent or is no longer working or something like that. Or I think that's what it will do. It will not recognize that this is just somebody who's on maternity leave. It will assume that this person has gone dormant or has has become delinquent or is no longer transacting, and those biases may make them exclude that person from whatever system or product or service that they're trying to access. However, a human being would know that this is not somebody who has gotten delinquent. The human being would know that this is somebody who is going through the natural progression of life, which is what you call maternity. Sorry. Okay, so those are some of the challenges, and let's talk about some of the best practices in case we get to the point where you actually do want to implement the digital twin technology. So the first is to start with a clear business objective. So before implementing the digital twins, you always have to have a clear business objective in mind. As with all technologies, the technology is the enabler. Your strategy should be what feeds into what you decide to go ahead with. So the objective or your strategy, your main goal should be what would guide your selection of those data sources, of those models, of the simulation scenarios. And it's also important that you also define what we use to measure. So KPIs that can be used to measure the success of the digital twin, rather than just doing it because the fear of missing out, or do you think everybody is doing it, or you just want to stay ahead of the curve. It's not rooted in a strategic objective, then you're just basically purchasing an expensive toy that you don't have a problem for it to fix, right? The next is also to establish a data governance framework. So because you require high quality data to produce accurate results, it's important that you have that data governance framework to ensure that your data is accurate, it's consistent, it's up to date. And that should include the policies, the procedures that you use for the data collection, the storage, the processing, and the sharing, so that you don't have, even if you do have multiple silos, you know that you are integrated into all the silos. So you have at least all bases covered, rather than just, giving its partial data or half data that it cannot actually clean from. Then also selecting the appropriate technology is important. So because it requires you to select appropriate technology, infrastructure, and tools, you have to select the appropriate modeling and simulation software, the backend technology, all the resources or computing resources needed to run the digital twin, so you don't have lapses or breakdowns or crashes in the systems that are not basically built to support this kind of high computing power. Then also involve the stakeholders, right? It's a complex area for people to understand. It's important that people understand what the use cases are, what the benefits are, and how it ties back into the strategic objectives of your fintech, of your bank, of your financial institution. Now, if you only bring in stakeholders at the tail end of your decision where they don't really understand, or if you don't involve the stakeholders that are necessary to bring this to life, so your technology team, your data analytics, your retail, whoever is going to be involved, basically it's a project management lapse. So it's important that you bring people in, as with any new technology that you're trying to do. The next is to make sure that you test, or you thoroughly test, because I think that's what it says when you look at the notes, that you need to test and validate before deployment, right? So testing the digital twin against real world data to make sure that it actually lines up, validating the accuracy of the models and assessing the performance of the simulation before you decide to just accept what it gives you, right? Then constant monitoring and updating of the digital twin is important, because obviously things might change. You want to make sure that it remains accurate and effective. So monitoring the data quality, updating the models as needed, assessing the impact of the digital twin on your business operations, making sure that it's actually meeting the KPIs, that little biases have not been brought in without you seeing. So overall, it's important that you have a comprehensive and collaborative approach that brings all these things together, and follow the best practices to bring that in. Okay. Now we look to the future. So these are some of the trends that we expect to see going forward. So as fintech companies continue to recognize the benefits of, or fintechs and banks continue to recognize that the benefits of digital twins or the technology, you expect to see more increased adoption across the banking industry. I remember in our field, when we tried to approach the banks the very first time, it was very difficult for them to understand that this would actually yield the results that we were, let's say, claiming that it would. But after we had been in the market, let's say 3 to 4 years, where we actually had results to show, then it was easier for the banks to come on board. They came on board, they took some of the hits themselves, but then they learned in the process. And I'm sure at this point, if any of them actually wanted to do some of these things on their own, they just could do that. It's just that sometimes it's not your core business. You really need to focus on keeping the lights on before you think about And if you can get a fintech to handle this thing better, why not, right? So we'll begin to see increased adoption as familiarity becomes, as data becomes more integrated into financial services, as AI becomes more popular, as we begin to see more talents like people graduating from the DFI community who actually understand the purpose of this. You begin to see that happen, especially if they get into a leadership position, right? There's going to be greater integration with artificial intelligence. So because the digital twins are basically leveraging AI algorithms, they are going to grow with that. And in that same regard, their predictive power, their accuracy is going to grow as well. So in the future, we expect to see greater integration between digital twins, AI, leading to more advanced and more sophisticated models. So we look to see an expansion of some of the use cases. So we've spoken about some of these, but then we will begin to see newer use cases emerge, specifically in banking. So adoption will expand further. Digital twins could potentially be used to simulate the impact of macroeconomic events like what we're experiencing in Ghana, so that you're able to provide, mitigate, or preempt certain things that might happen to you. So you're able to use that, use these simulations of what worst case scenario for a bank would be if the economy tanked, and what you could do now based on this information to preempt that. Right, we are going to see more improved user interfaces. Right now, it's a lot is still basic. The headset that allow people in other industries to see that are very expensive and reserved for just a select few. But we are going to see improvements in the user interfaces. It allows people to be able to engage with it more freely. It's going to become a daily thing that you can use on your phone, on your laptop, and it's easier to interact. And then we are going to see more. Sorry, did I move? You're going to see more integration with blockchain. So blockchain is one of the technologies that is globally acclaimed to be one of the game changers. It is beginning to gain traction within the banking industry specifically. And as it grows, technologies like digital twins integrated with blockchain, so that you have that ubiquity, that transparency of a public ledger attached to a digital replica, so that the data is amassed, will begin to become more visible. So the security and transparency of sharing data between different parties will lead to more efficient and streamlined business processes, right? So, and the final thing is what I think is one of the most interesting parts, where we have digital humans. So the end goal for digital twins is an iteration called digital humans, where we get to the point where, based on all the data that is collected on, let's say, Austin, you are able to predict his behavior. And some of the use cases that people have said is, you are able to predict a person's behavior so accurately that you are able to model a digital replica of them and assign that digital replica to them as a virtual assistant, because that digital replica is built on the person's habits, the person's patterns. So if you had a chat GPT that was modeled, let's say, after Austin, if Austin asked it to write a 2,000-page essay or to put together a presentation for his credit risk committee, because the digital twin is mirroring his activities, it's able to do that. Now, some of these things are easier to show than to say, but there's a company that has done a simulation of what that would look like. And I don't know if I'm sharing sound, but let's play this video to end the whole thing, so that you sort of see what the end goal is supposed to be from a digital replica of a human. So a digital human that is a digital twin. So say hi to Fred. And if you can hear the sound, just give me a thumbs up so that I don't have to stop and start.
Jeremy, we can't hear the sound, no.
Jeremy, we can't hear the sound, please.
You can't hear the sound. Okay, sorry. Let me try and share with sound. Okay. Oh, 1 second.
My name is Fred.
Can you hear?
Yes, but if we bring some more volume, yeah.
Oh, I think it's because of my headset. Sorry. Let me just take this off.
Hi, my name is Fred. No, I'm not a real person. I am the new digital human from Render People. I am a virtual 360-degree copy of my real self. Therefore, I'm able to talk, to smile, to laugh, or to cry. Just like a real human being. So the possibilities are endless. I could be a speaker moderating your next digital event. I could be your virtual assistant for your online shop. This outfit suits you. Shall I add it to your cart? Or I could tell you the status of your car inspection, keeping you updated. Fully digital and all without you having to be on site. And this is only the beginning. The only limit is your creativity.
Okay, hope everybody was able to see that.
Yes, Jeremy, that's a good one. Yeah.
Okay, great.
Thank you so much, Jeremy.
You're most
Thank
welcome.
you so much, Jeremy, for an in-depth presentation. My name is Ekia Mansakisi, your moderator for tonight. Unfortunately, my network failed and Barbara had to take the fort for me. We'll now take some questions from the chat box. So if you haven't sent your questions yet, kindly do so. So Jeremy, the first question is, how big is the demand in the market? And how is the lack of skills impacting the demand today?
So could the person asking the question clarify if they mean the demand in the market for digital twins or the demand in the market for people who have the skill sets that are required for digital twin? Which are
I think it's a demand in the market for digital twins.
That's going to be very difficult to quantify. That's basically asking what's the demand for artificial intelligence, or what is the demand for fintech products. It's the consumer is not going to know whether that is something they demand or not. There is a demand for more improved services, more improved customer experiences. I think if you do all the surveys, you're going to hear back from customers that I wish I didn't have to fill forms. I wish I didn't have to have a mobile app, but still have to call a bank representative. I wish I didn't have to call a call center. So there's a demand for what a digital twin would facilitate, but I don't think if you're looking for the asking a customer what the demand would be, they would be able to tell. So it's quite difficult to answer that.
Okay, thank you, Jeremy. So we are taking our next question. Said, is AI being actively incorporated in higher education courses, or folks need to take private training courses instead?
So for now, I don't know of any, let's call it local education programs that are incorporating AI as part of higher level education. But if you did try to take an MSc, Wilfred, I don't know if you want to answer the question or you want to ask your own question.
Sorry,
okay,
I wanted to ask a question, but can finish answering yourself.
Okay, sure. So if you did want to take, let's say, an MSc in finance from one of I think the Spanish universities are doing that, definitely there is an AI class. Even in the DFS curriculum, there is artificial intelligence in business. I've actually made a video recently where I've listed 6 of the top artificial intelligence courses that people are taking right now. So in the global world that we live now, you don't have to wait for it to be incorporated in your local higher level education. You can actually get that knowledge yourself. All right. I hope I understood and answered the question.
Yeah, I'll jump in here. So I asked that question, right? It was really tied to both the demand and the challenges where you said lack of skills, right? So I was really trying to tie the demand and the lack of skills together to see how big is the demand. And, not from a customer standpoint, but just from a market standpoint, right, and innovation standpoint, and how we addressing that from a skills standpoint.
Okay, sure. So I can only give an example from where, let's say, I work. So we work with some of the top data analysts and scientists that you can find, let's say, on the continent. However, Bank of Ghana requires you to localize as much as possible. But for example, our company tried to find, I don't even know what it means, but level 4 and level 5 data scientists and engineers. And we basically couldn't find people in Ghana who qualified. So they had to look to Kenya and the other countries. I don't know if it's the way that it was marketed that wasn't clear, but you see that you have people who are basically now getting into the space. You don't have people who have been in the space and are as qualified. So I know the demand is there as well. Some of the banks are looking to build some of these technologies that they have to outsource in-house, but the challenge for them is local talents. They always have to outsource to other countries. So to give you an actual quantification of the demand, it would be difficult to do, but I can use ChatGPT to do the research for you and then share with you.
Right, thank you, Jeremy.
Yeah.
Thank you, Jeremy. So our next question is, how do I address the fear that AI has the tendency of taking over human work and livelihood?
I think it's a healthy fear. I mean, let's not call it a fear, but it's healthy that you are thinking about that, right? But the reality is, what people are saying is, whether you like it or not, AI is going to become embedded. AI is already embedded in the activities that you do every day. When you go on Netflix on your TV, it's able to identify the recommendations that should present to you based on AI, right? Your Facebook feed is bringing you ads that are suited to some of the things you need. So people are saying that the way when electricity came, people were worried about it. It's the same when AI comes, people are going to be worried. But even though it will make certain jobs, let's call it, it's going to make sure that certain jobs that are monotonous are no longer required, but it's also going to create certain jobs. So the best way I feel like you should deal with that, let's call it fear, is to educate yourself on artificial intelligence. You begin to find out it's so broad that there's so many aspects that you can begin to gain intelligence on. And most business leaders are either too traditional or just too lazy to learn about the field. So if you take the initiative and actually gain some knowledge there, then it becomes easier for you to engage with what the next wave of financial services are going to look like when they are embedded with AI. So I think one of the best solutions to fear is just gain as much knowledge about the area as possible so that it doesn't catch you off guard. Just don't stay traditional, that's all.
Thank you, Jeremy. Let's take our next question. It says, any insight into any notable company in Africa, or preferably Ghana, who are actively pursuing the digital twins capabilities?
Oh, I know our company is doing that. So for example, Jumo works with, let's say EcoBank. So William is here, my good friend. But one of the things that we constantly get pressed for when it comes to running, let's say, a product that is using alternative data is you need to collect better. You need to be able to segment the customers better. So in order for us to be able to identify that this customer has been using this particular product, but would also be good for this additional, let's call it, upgrade to a product, you need to be able to model that customer well, because the least mistake you do could essentially collapse the portfolio, because now you are assuming a customer is behaving a certain way when that customer is not. So if you want to make sure that you are granting, let's say, loans to the best customers, when all you have to go by is their data, you've never met the customer has never come to see you, all you have to go by is the data that is provided. The best way to go about this is to create digital replicas of each customer for each segment, so that you know that when it comes to, let's say, an EcoBank, we only limit it to this persona of customer, and you have it like I wish I had taken screenshots. That would have been helpful to show, but we have personas of all of these segments of customers, so it's easier to show you what it looks like and what their characteristics are. Who is good, who is learning, who is just bad. So there's companies. Our company name is Jumo, and the Snapchat company I also posted. I've forgotten the actual name, but it was one of the companies there. It's difficult to find data on the companies in Ghana because most people don't share as much, but outside, it's easier.
Thank you, Jeremy, for the insight. Now we go to our next question. Is any idea on the estimated cost for implementing a digital twin technology? Do you think it is possible for an institution to invest in a digital twin technology to serve specific industries like banks, insurance, BDCs, and possibly government institutions, the MOFs and the MO Agric, etc.?
So the answer to the latter question is yes. Yes, banks, institutions, governments, and institutions can all implement digital twin technology. I think if it comes to a quantification of what the cost would be, I doubt that it's going to be one cost for every. So you're basically asking me how much would it cost to set up something like a data analytics unit for a specific institution. I just simply wouldn't know the answer to that. Right. But if you do decide to do that, there's people who you can speak to. There's lots of companies that are specifically doing this. So AI as a service, data analytics as a service, and they come in and plug into your system, or they create standalone systems that you can plug in for a fee or for a revenue sharing model. So I can't, the way that the costs are structured is difficult to quantify, right? But it is something that, like I've shown, a number of industries are doing already. So it's not new. It's not new game.
Thank you, Jeremy. So this is from Kabani in South Africa. He wants to know how he'll be able to integrate digital twin into his digital loan app, and they do micro lending.
So you basically have all the data that you require. So one, I don't know how long you've been on your micro lending platform, be it an app or be it a different channel. But basically, if you do have back-end support, you have a data analytics team, you have a data science team, you have portfolio management, asset management, all that data that is gleaned from your customers as they continue to transact and grant the digital loans makes it easier for you to profile each customer and then build these digital replicas of them. Now there's AI platforms like TensorFlow and the like that people use to create these models, but then that's easy to obtain. You just pick a software that you're going to use. The one I'm familiar with is TensorFlow. So you might use TensorFlow to do that. If it was actually taught in our DFS class with the AI in business, where you actually get a chance to run some of these simulations yourself. Obviously not on digital twins, but similar.
Okay, thank you, Jeremy. Wilfred wants to know if there are any associated risk with digital twin.
Oh, yes. So I think we highlighted quite a few. One, the fact that it is heavily dependent on having wholesome data. So if your data governance or your data management or your data platforms, it has to come from a single source of truth that integrates all available data in a manner or in a structure that is clean and easy to consume. If there's issues with that underlying data, then you're going to have issues with your model. It's the same with any model that you try to build. So, going back to the basic garbage in, garbage out, you have a digital twin that is malfunctioning because the data was not accurate and you weren't able to have, or maybe it simply wasn't enough. You've not built enough of a database that can be actively used. And I'm sure that the experts will be able to tell you. There's other things, right? So there's regulation, right? You need to make sure that you are maintaining the privacy of the people whose data you're using. You are conforming to regulation when it comes to all of these things. I think we listed a bunch of the risks. I'll send the deck out to everybody so you can have them.
Okay, thank you, Jeremy. Austin, your hand is up. Would you like to ask a question?
Yes, it's just a follow-up. It's of course a follow-up question to a question I dropped in the chat. So first off, great presentation, Jeremy. Completely spot on. I just wanted to expand on the question around the estimated cost of setting up between a digital twin technology and trying to make sense as to whether you think that an institution should be investing in that technology based on the costs, assuming we knew exactly how much it costs, or rather we have maybe an independent organization that sort of provides that service? Again, you mentioned the bit about the different data points that sort of enriches the value of the final outputs of these digital twin. And so, within the context of now having these Ghana card being a more universal card approach, and therefore it makes it easier now to have one institution that's able to sort of pull this information either from mobile money transactions, from banking transactions, and other financial activities, of a particular person, and then have institutions like a bank, insurance companies, and even to some extent, even some government agencies plugging in to say, hey, I have this list, but I have this list of individuals. I want to be able to provide some value adds to them. However, can you utilize your twin and digital twin capability to sort of give me an improved or validated, information on these people so that I can make informed decisions, because I may not have access to other data points that would have helped to enrich them. So you have this independent institution that invest in it, but then serving these institutions to sort of help them better serve their individual customers.
Sure. So that's quite a loaded question, Austin. I thought you were my friend. So let me try and answer it in phases. One, if it comes to whether you should invest in digital twin technology, assuming you knew all the costs, I think it depends on what your strategic goal as an organization is and where you are on your journey to achieve that goal. If you've gotten to the point where you have been able to internally prioritize that you are going to be looking at next gen products or next gen applications, then you know that, okay, you are trying to you have an arm that is exploring some of these emerging technologies, and you've gotten, let's call it board approval or the input of stakeholders, and it's aligned with your strategic goal for, let's call it customer experience or enhanced analytics, then fine. But the one thing you also don't want to do is to go off trying to make a case to invest in something like this when there is no bridge that connects it back to what the bank is trying to achieve. So for example, the institution is trying to achieve. If the institution is right now, trying to figure out how to make up for its interest income that is lost to government bonds, and you come and suggest a digital twin technology, they really can't tie that back. It would be a mismatch. The second thing that you raised was if you had let's call it a central source of truth. So the limitation with things like the Ghana card right now is the way that it's intended to work in an ideal world is not how it actually works. If it were an ideal world, that would be fine. And what I mean by that is right now, if I asked you, Austin, to go and get information on your Ghana card, that Ghana card is supposed to be housed in a central database. But if I ask you to go ask for your data, so every place you've gone to where they've asked you for your Ghana card, every place where you've submitted your Ghana card and provided the details, the actual biometric data that they collected from you and all those details. If I ask you to go ask for it right now, would you be able to get it? I doubt it. I doubt any of us has actually been able to. All we know is that Ghana card is the single source of identity that anybody collects, but nobody's actually warehousing that data. If that existed, it would be easy for you to say, okay, there's this third party that has access to this this centralized repository of all GH card information. Based on that, they're able to create a simulation of a person's activities, so on and so forth. But it doesn't exist like that. But if it did, then potentially so. That's the challenge. Having that single data source that allows you to be able to simulate a person's patterns, behaviors, actions. It's easier when it's on your system because it's your bank platform and you've successfully been able to transform from a siloed enterprise to a platform business. Then we say, okay, then give us your platform data source and then we connect. But without that, it becomes very difficult to actually implement. And that's one of the limitations that exists. Sorry for the long answer too. It was actually a long question too.
It was so long. Thank you, Jeremy. This is a contribution from Cameron. He says, I think AI would not entirely replace jobs. However, it might replace people who lack the technical skills to work with AI in their fields when it comes to that. And then Yeah, Contran says it's an excellent presentation. He wants to know, how does the issue of data integrity in terms of hacking, data theft, security breaches place here? He said you touched the aspects of data protection, the GDPR perspective, but wants to know the technical aspects in terms of criminal taking control and using a digital twin to harm or steal.
Yeah, I think that's a brilliant question. So it's actually a real risk, right? As transactions started to become more digital, we began to see the rise of cyber criminals. And in the same way, if the merits of digital twin begin to become more visible, we expect that in the same way the cyber criminals will follow suit, which is why it's important that your data governance is on point, your cybersecurity is on point, and it's really going to have to be a learning and an incremental journey. If you automatically, let's say, assuming you were able to create, like say, a digital twin of Gottrand, you the same way you would handle your digital products, where you would place limits on how much can be transacted or how much data it has access to, you would probably want to do the same thing with this, just to begin with, till you get to the point where you're confident enough in your cybersecurity efforts, so that you don't begin to lose data or actually suffer financial loss. So it's a really good question. I think it's something that we have to stay cognizant of. It's a real risk, but it's one of those risks that is going to have to be mitigated as we begin to become more mature in the implementation of the technology. I hope that made sense.